Let me, sort of highlighting what is the global sort of tax and accounting convergence scenario, and what are the, what are the alternatives that globally countries follow when they look at convergence between their taxation rules and the accounting framework. And we sort of broadly could divide the approaches in the three categories that you see on the screen, which is a dependent approach, a quasi-dependent approach, and an independent approach. I mean, the names are self-explanatory. When you say it's a dependent approach, it's where the tax provisions or the tax calculations are directly dependent on the book profits. And if I were to sort of give a parallel of that example in the Indian context, you look at the provisions on MAT, which says that the book profits will be the tax base or the base for computing your taxable profits. So MET regime rather is absolutely like a dependent approach. Then you have what is a quasi-dependent, where you are materially dependent on the accounting. So you start with your accounting profits and then do a number of adjustments to your accounting profits to arrive at the final taxable income. And everything that we do on business income computation in this country today, which is the whole set of sections from 28 to 44, is exactly the quasi-dependent approach, the current regime under the tax laws. And then the third set of countries which follow an independent approach is where the accounting and the tax have no convergence with each other. So both sort of operate independently and have two different set of rules. And if one were to sort of look at what is in store when the direct taxes code comes into the picture, and assuming it comes in the same form and shape, and we don't know, Anil said it's probably many whiskers away, we don't know when it's going to come. But when that brings in the income and expense model, where each of the items of income, each of the items of expenses are specifically laid down, and you don't have to go back to anything else. You just pick up those numbers from wherever you are. Probably you don't even need an account to draw up a computation of income under the DTC model. So if you look at these three approaches and then look at the trend across the world, the trend is for more and more tax and accounting convergence. You want the two tracks to be coming closer to each other in our example and what Kaushik said, rather than sort of getting away. And then when we look at a recommendation and the tax accounting standards, we look at the deviations. The question that we want to ask all ourselves is, are we wanting to stand out in the global world of convergence and sort of take two different paths on the tax and the accounting side?